Welcome to our deep dive into the world of money laundering, a practice as old as money itself. Today we're going to unravel the complexities of this illegal process, showing how it disguises the origins of illicit funds, making them appear legitimate. But before we begin, a crucial disclaimer. This video is for educational purposes only, and we strongly condemn any involvement in illegal activities. Money laundering is a criminal offense, and this content is intended to shed light on its mechanisms, not to encourage or endorse it. With that said, let's embark on this informative journey to understand the hidden mechanisms of money laundering. Money laundering is the process of making large amounts of money generated by criminal activity, such as drug trafficking or terrorist funding, appear to be earned legitimately. It's a critical challenge for global financial systems, affecting not just the economy, but also contributing to criminal activities. The term money laundering is believed to have originated from the notorious gangster Al Capone, who used laundromats to conceal his ill-gotten gains during the Prohibition era. The term money laundering actually dates back to the early 20th century, linked to organizations like the Mafia laundering their money through laundromats. Since then, techniques have evolved, becoming more sophisticated with the advent of technology and globalization. The modernization of financial systems and the growth of the internet have given rise to online money laundering schemes, making it even more challenging for authorities to combat. Money laundering typically follows three stages: placement, layering, and integration. Placement involves introducing illicit funds into the financial system. Layering conceals the source through a series of transactions and bookkeeping tricks. Finally, integration is where the laundered money is reintegrated into the economy, appearing as legitimate business earnings. Criminals have been known to use casinos for the placement stage, as large sums of cash can be exchanged for chips and then cashed out as winnings, providing a veneer of legitimacy. During placement, criminals face the biggest risk of detection. They might divide large amounts of cash into less conspicuous smaller sums that are then deposited directly into a bank account, or they might purchase a series of monetary instruments that are then collected and deposited into accounts at different locations. In the United States, banks are required to report cash transactions over $10,000 to the authorities under the Bank Secrecy Act, making large cash deposits more likely to trigger scrutiny. In the layering phase, the money goes through a complex series of financial transactions to obscure the trail and sever the link with the original crime. This often involves international wire transfers, purchasing high-value items, and investing in legitimate businesses or offshore companies. Shell companies are commonly used during the layering phase to create complex financial structures that make it difficult for investigators to trace the fund's origins. The final stage, integration, is where the clean money is returned to the criminal from what seem to be legitimate sources. This could be through property transactions, fake salaries from front companies, or investments in legitimate businesses where the money's origin is difficult to trace. Real estate is a favored choice for integration because it offers an opportunity to park illicit funds while appearing to engage in a legitimate financial transaction. Money laundering has a profound impact on global economies, contributing to financial instability and undermining the integrity of financial institutions. In response, governments worldwide have enacted stringent laws and regulations, like the Bank Secrecy Act in the US and the money laundering regulations in the UK. The global financial cost of money laundering is staggering, estimated to be between $800 billion and $2 trillion annually, according to the United Nations. Despite these efforts, anti-money laundering, AML, faces challenges. Criminals continuously adapt, exploiting new technologies and weaknesses in international financial systems. The fight against money laundering requires constant vigilance and collaboration between governments, financial institutions, and international bodies. AML regulations have expanded to include virtual currency exchanges and other financial entities to keep pace with emerging money laundering methods. Technology plays a dual role in money laundering. While it offers new ways for criminals to launder money, such as through cryptocurrencies, it also provides powerful tools for detection and prevention, like artificial intelligence and blockchain technology. The use of blockchain technology can enhance transparency in financial transactions, potentially revolutionizing AML efforts by creating an immutable record of financial activities. As we look to the future, the battle against money laundering will likely intensify. It will be a race between the ingenuity of criminals and the determination of those working to uphold the law and protect the financial system. The rise of decentralized finance, DeFi, and the adoption of digital currencies will pose new challenges for AML authorities, requiring innovative approaches to enforcement. With the digital revolution, money laundering has entered the online realm. Criminals can exploit the anonymity and accessibility of the internet to move and launder funds more discreetly. Cryptocurrencies, online casinos, and virtual payment methods have become hotspots for illicit financial activities. Money launderers may use mixers and tumblers to obscure the source of cryptocurrency transactions, making it challenging for investigators to trace the flow of funds. Money laundering isn't just an abstract concept, it's a real and ongoing issue. High-profile cases like the Panama Papers leak and the HSBC money laundering scandal have exposed the extent to which individuals, corporations, and financial institutions can be involved in these illicit activities. The Panama Papers leak, which involved over 11.5 million documents, exposed the offshore financial activities of prominent figures worldwide and prompted investigations and policy changes in many countries. Financial institutions play a crucial role in preventing money laundering. Banks, in particular, are required to implement strict Know Your Customer (KYC) and Customer Due Diligence (CDD) procedures. They must report any suspicious transactions to authorities and are subject to hefty fines for failing to do so. The penalties for financial institutions that fail to comply with AML regulations can be substantial, including fines in the billions of dollars and reputational damage. Whistleblowers have played a significant role in exposing money laundering schemes. Various countries have introduced legislation to protect and encourage individuals who come forward with information about illicit financial activities. These whistleblowers often provide essential evidence to law enforcement agencies. Whistleblower protections vary from country to country, with some offering financial rewards for those who provide information leading to successful prosecutions. While we focus on the financial aspects of money laundering, it's crucial to remember its human toll. Money laundering is often linked to organized crime, drug trafficking, and even terrorism. The funds generated from these illegal activities can perpetuate violence, corruption, and instability in affected regions. Money laundering that supports terrorism poses a direct threat to global security, making it imperative to combat this financial crime effectively. Thank you for joining us on this enlightening journey into the world of money laundering. We hope you've gained valuable insights into the complexities of this issue. If you found this video informative, please give it a thumbs up, share it with others who might benefit from this knowledge, and don't forget to subscribe to our channel for more educational content. Remember, knowledge is a powerful tool, and understanding the intricacies of money laundering is essential for combating this financial crime. Once again, we emphasize that this video is for educational purposes only, and we strongly discourage any illegal activities. Stay informed, stay vigilant, and let's work together to uphold the integrity of our financial systems.